Today's episode is presented by LodeStar, the fee experts.
Hi, everyone. Thanks for listening to this week's episode of Lending Leaders. I have a great guest today, Melissa Langdale, President and COO at the Mortgage Collaborative. Shu will tell you all about that. LodeStar is a new member of TMC, and we're really excited for the partnership, as well as Melissa. This is the second time we're recording after coming on your podcast, so really excited to ask you all the hard-hitting questions this time, Melissa.
Oh, fantastic. I can't wait.
So thanks again for coming on. You've been in finance, mortgage, technology for a while. Tell us how you got involved and what led you to the position you're at today at the Mortgage Collaborative.
It's a great question. Thank you. My journey has always really been centered on my why. I feel very led to leverage my gifts that I feel like I've been given to help others. And for those of you that have not heard this story, I grew up in mortgage. My parents were actually top producers, like top 1% of the country type producers. And so had the privilege of learning from the best out of the gate. But really mortgage was not, not unlike anybody else's story. Mortgage was really not in my purview. I did not want to be in mortgage because I saw the craziness that my parents had that I'd grown up with and that they were dealing with. And so I graduated college though, and I needed a job and they needed help. And so I told them, I was like, you just have me for 12 months. That's it. I'm going on and getting my MBA and MHA and I'm done with this. And 3 months into working with them, one of our customers called me after closing, crying and letting me know her story. She was a first generation homeowner, and she just shared with me that this was the legacy that she was going to be able to leave her children. And I literally came to my parents that day and I said, okay, finally, I get it. I understand, and I'm all in. I want to do everything I can to learn as much as I can about the industry. And so I've been in operations, I've been in sales, I've kind of built branches and areas and divisions and launched a company from the ground up for a community bank in North Carolina, and then kind of built out some mortgage operations for a fintech company in Austin, Texas, and then I'm here at the Mortgage Collaborative. So, I was actually introduced to TMC as I was building the company in North Carolina. And I was at this kind of pivotal point in my career where I felt like I had a really good, strong operations, sales, compliance background, but didn't have the strength in cap markets. And I can vividly remember feeling like I was wearing out my mentors. And I called them and I said, two different gentlemen, I said, you've got to give me other people. Like, I don't want you to ever feel like if you pick up your cell phone that, gosh, here she goes again. There's one more question. It's like, I don't want to wear out my welcome. You have to give me other people. And actually, both of them told me to call the Mortgage Collaborative. And showed up to my first conference, and you've been to a billion conferences yourself. Most of them you're kind of talked at, right? You're presented to and me being the studious person that I am, I came with notes, right? I'm going to take all these notes and learn all of these great things. The Mortgage Collaborative was so different. You're in the room with peers, in the room with other executives, in the room with others that have been where I wanted to go. And so it was such a privilege to be able to learn from them. But they also needed all of my kind of new and fresh ideas. And so it was just this great, perfect balance of collaboration that really helped kind of fuel my career and fueled how we were able to build the company in North Carolina. And I tell everybody, I was like, I still would have built it, but I built it stronger and faster because of the connections that I had at TMC. So very excited to be here and to be a part of TMC's growth in this capacity in the future.
Yeah, I've been aware of TMC for a while and always impressed at the concept of it. And quite frankly, getting people to collaborate. I think so often in this industry, you see everyone's a competitor to everyone else, right? And we have our secret sauce. Stay away from me. This is what we're doing. Any deal that I don't get, it's a problem, right? Very few people have that perspective of mindset of abundance. So how do you get lenders to kind of play nice and work together?
I don't think we can get anybody to do anything. I think we can put people in the room that are very comfortable with sharing those things. I think fostering relationships and helping them to build those putting them in environments that help them to build those relationships is really critical. We do have, things like collab labs, which you've probably heard of before. These are our kind of closed door sessions that are, everybody signs legal agreements going into them that does provide some extra protections for the group. So we do things like that to help for sure. But most of it is about kind of curating events that help people to build relationships that build trust, so that they have the ability of sharing more about their organization.
And do you feel like you've gotten resistance when folks are coming in wanting to, this is only much I'm going to share, or this is like what makes someone successful or not successful in that environment?
We don't get much resistance. Most of the people that kind of hear our story and recognize our value are there to learn and collaborate and help each other to grow. And so we've been, I think, very lucky in that regard. It is most of who we serve in the marketplace is small to mid-sized mortgage lenders, right? And so most of them are eager to just being in that space, eager to help each other to grow. Sometimes because necessarily footprints don't overlap. Sometimes in cases where they're really wanting to strategically take their organization to the next level, and they can leverage cumulative brain power to continue to grow in new ways. So it's it depends on the lender and what they're looking for, but for the most part, we've been very lucky. We don't get much kickback.
Do you find what lenders are getting out of it changes based off the type of market? Obviously, we're in a prolonged downturn right now.
Yeah.
How are those conversations different when it's raining outside versus not?
The conversations change, but I think it's times like this, and we talked about my below the waterline video a little bit before, but I said it there, and I'll say it here again. It's times like this that organizations like TMC are so valuable, right? They help to build that foundation. They help to leverage cumulative brain power to navigate extra risk, to help navigate unique market conditions, all of those sort of things. But even when the market is great, there's still challenges that leaders and lenders go through all the time, right? There's staffing capacity, there's recruiting efforts. There's still always something that our lenders are looking at to improve their business or take it to the next level.
I'm in a CEO group myself. I was yesterday in an all day meeting. We meet once a month all day. It's like group therapy too, right? Because you're dealing with people who are in the same seat, making the same decisions, and there's oftentimes you can't talk to other folks at your company about things because it kind of affects them. So I think having that outlet for me has been very helpful. So I feel like TMC can certainly be that for folks as well.
Yeah. I mean, that's what we're here for. Giving them an opportunity to learn from one another. And like you said, there are times where they can't share it with others, but they can share it with peers across the country, and that's where we come in.
And most therapists don't understand the mortgage industry, so you have your lane.
We actually have several of our groups that talk about it being their mortgage therapy. So it can definitely serve that purpose.
And I think that's important. So in this situation that folks are in now in this market, do you feel like there are missed opportunities? You had the video of what's below your waterline. What ballast do you have to handle the stormy waters? What does that look like for lenders?
Um, Gosh, missed opportunities. I think most lenders today are looking at improving their kind of tech stack. They're working on kind of intentionally designing workflow, customer experience. I think every lender across the country is still facing the challenges you can imagine, right? They're facing this perfect storm of inventory being low, rates being high, affordability being a challenge, competitiveness in the marketplace. It's driven by volume, right? There's profitability is a concern as a result of all of that. I think um, the biggest opportunity I think that our lenders are looking at, even if they can't if profitability is really a concern and they don't feel like they can invest in new technology platforms, they're leveraging, their existing tech stack. They're rethinking kind of workflow design, uh, within that tech stack to help create operational efficiencies, a better customer experience, help them to better engage, maybe even with referral partners. And so, even in cases where lenders may not be able to kind of invest in new technology, being able to rethink how they're leveraging existing technology, I think can be critical.
Yeah, it makes a lot of sense. Vendors like myself also kind of bemoan the fact that lenders either have no time or no money, right? Market's going well, you don't have time to invest in new technology. Market's not going well, you don't have money, right? But I think the good vendors, to your point, are always looking to leverage what they have.
Yep.
And I think the biggest factor that I think relates to success in any new vendor and any new technology is how does it fit into everything else?
Yeah.
And I think that's where talking to folks who have done it themselves and implemented similar vendors and had those experiences, makes a whole lot of sense.
Yeah. Yeah, for sure.
Mhm.
I agree.
And I know one of the other initiatives that you've launched is TMCU,
Yeah.
courses for mortgage professionals. How do you view kind of education, especially folks recruiting, if that ends up being a pain point for a lot of lenders?
Yeah, so I see it in a couple of different ways, right? Education can be leveraged to invest in that next generation of mortgage professional, that next generation of leader, but also, how do we educate and inform our existing leaders on new innovative solutions, for example, that can be impactful to their business? And so TMCU really is looking at all of those different segments of how do we help our lenders be able to kind of build that next generation of either mortgage professional or leader. And then how do we keep them up to date on the things that can be really impactful from an innovative technology perspective to their business? So really looking at all of those.
Yep. No, I think that's great. I think that's really needed. I think, a lot of folks, I would say you either stumble into this industry or you're born into it. Like yourself, like me, I grew up in a national title agency, and I remember climbing on cabinets. I remember they had typewriters
Yeah.
to type out policies. And then one day I said, "Hey, I got a call from my dad. Hey, can you build a calculator for us?" Um, and that's led to all of this, right? So when you're saying like, oh, I'll do this as a side job, I'll do this for 12 months, I'm like,
Yeah.
I'm in grad school, let me do this for a project while I go get my master's in engineering, right?
Yeah.
and
Yeah.
and now we're here, so I definitely related to your story there.
Yeah.
But how do you think companies can recruit new talent, and do you feel that as a pain point now with not the youngest industry in the world that we're dealing with here?
You know, this is the challenge that a lot of lenders have right now is, you have a very limited amount of loan officers that are doing a lot of volume. And so everybody's, looking at those top producers. Um, but I see right now, I still see companies that are making headwind and growing market share by bringing in new loan officers. They're doing it through, marketing opportunities. They're helping loan officers to see how they can grow as a part of joining their company. And so, we're seeing that all the time. I'm also seeing loan officers that are growing in the midst of all of this, even with the challenges that are in front of us. They're doing it with energy and enthusiasm and fantastic marketing efforts. And, it's so it's a combination of all of those. It's having the right foundation that loan officers need, and it's helping them to be able to grow their volume as a result of all of that.
And what do you think those loan officers are doing well? I think there's always a balance between, do I diversify or do I find a niche and exploit the heck out of that niche, right? So like, is there one approach that you're seeing be more successful?
That's a great question. I think um, every loan officer wants to never have to say no to a referral partner. And so I think, for in case we have loan officers that would ever listen to this, they're looking at, I want every product imaginable, but I, you know, the core foundation of what everybody's really offering to consumers is, conventional, the things that you can imagine, right? Conventional, JVA, USDA, they're kind of the bread and butter of the industry. I think where loan officers can really stand out, though, is how they structure loans, the questions that they ask customers through the process, right? Are they really being the advisor to the customer and understanding kind of short term and long term needs? Are they positioning them well enough with the mortgage insurance options that are out there? and really helping them to both understand, how they get to the closing with either the least amount out of their pocket or the lowest um, payment options. So I think the loan officers that are taking the time to be really good at structuring loans are going to be the strongest converters right now.
I think that makes a lot of sense, right? Being a consultative partner, and even with interest rates as high as they are, they're still can make a lot of sense for people because it's less expensive than a lot of other debt that's out there.
Yeah, yeah, for sure. Yeah, mortgage insurance is, a great differentiator. Not many people are looking at it other than kind of monthly. But really, for the right customer, you can do single premium, you can finance it, you can do lender paid. So there are a lot of different options that loan officers could be using right now to help differentiate themselves.
And I think to your point that there's existing technology that people can use to do that job better, to
That's right.
present options better, right? Other than the boil the ocean approach, to go back to our nautical
Yeah,
analogies from
yeah,
earlier.
for
So
sure.
before we ask our last question here, anything else? I know you host a podcast, so I always like to interview folks who are used to being in front of the microphone. Anything you want to ask me? Anything we didn't touch on? Anything you want to address before we ask our traditional question to wrap things up?
Well, my favorite question is always to ask people, if you could fix any one thing in the mortgage industry, where would you start? And you and I've talked about that a little bit. You've obviously fixed something pretty critical in the mortgage industry. So I'd love to hear, why you started with that one thing. You started to talk about it a little bit with your title reference and your kind of history growing up with this, but
hmm I think it's only a piece of it, right? It's for me, it's not necessarily closing costs, but it's the understanding of the process.
yeah,
Like, I think people understand the home buying process so little at the end of the day. I have friends who, they have master's degrees in finance, they work in accounting, financially very savvy people, next to no idea what's going on,
yeah,
right? And it's kind of like they're blindly following the partners that they connect with. In many cases, that's a realtor because that's the first person you talk to. They've come to me and said, "Oh, my company supports a real estate lawyer, so we're using them." I look at their loan estimate; it's ridiculous. Or they say, "Oh, the seller's just telling us to use this person." I'm like, they actually can't do that, depending on the state. So there's just so many things people don't know. Where, oh, I'm working with an attorney, even though it's not an attorney state. So
yeah,
I think there's just so much confusion around the process of
yeah,
what to go through. Never mind mortgage insurance. How much do I need to put down? Now, what do I pay a realtor?
yeah,
All of these types of things. Then you get into title insurance, which is incredibly important and really the gatekeeper of making a transaction happen, but no one really knows about it. And it, feels like it's, a scam to many people, which is very incorrect,
yeah,
right? In my mind. So I think that consumer education is really important. And we've only scratched the surface of that with closing costs. That's something we want to get into much more deeply with title services. We started our own title company, Settlewise. So that's one of the things that we're going to be doing to help with that a little bit more. But it's just really educating people with the process, because I think the gap between consumers and what and what us experts know in the industry is so much, because people don't deal with this very often at all in your lives. And
yeah,
one of the stories you told that resonated a lot with me was the phone call you got when you were working at the mortgage company. For me, it was when I was at my family's title company, which I worked for a while, working on things. We're trying to sign lenders here, where we're in the day-to-day of things, and then you see someone come in for their closing. They're dressed up, they're serious, this is a big deal to them. It might be the first home that anyone in their family's ever purchased, and you could just tell this is really important,
yeah,
right? And like that image has always stuck with me, because regardless of how much we bellyache or the types of things we work with, these transactions are a huge deal
yeah.
to the people doing them. And I think it's always really, really important to keep that front row center.
Yeah, I could not agree more. I've had so many, the story I told was the one that really caused me to get into the industry. I can vividly remember, gosh, back in it was right after Hurricane Katrina hit Louisiana. If you remember, that poor city was in just it was a mess. And I got a phone call from one of my builders, and he said, I've got somebody I really need your help with. And I said, okay, well, tell me, what's the challenge? How can I help? And he said, um, you just have to talk with her. And so I got on the phone, I talked with a customer. She shared with me she had 7 family members that were lost in Hurricane Katrina. And one of them was on the news, and it was a whole big thing. And she came to us. She'd never worked. She never had credit. Her husband had taken care of everything over her, entire life, right? She went from her parents' house to her husband's house. So she didn't have a clue how to budget. Spent time with her as the house was being built, spent time with her building her credit, helping her to budget. And I can vividly remember being able to call her really on Christmas Eve, telling her that her loan had been clear to close, and her crying. She showed up to closing, and her hands are shaking, right? Her hands are shaking. She walks in. We go through this whole process of signing, and her head like hits the table, and I was shocked. I'm like, what is happening? Is she okay? And she turns and hugs me. She's literally sobbing, thinking that this was the stability that her family needed. Right? She was able to start over and provide some stability for her family. And those stories are all day, every day. Right? Our industry has an opportunity to make an impact in our communities and in customers' lives every day.
Yep. Well, you kind of stole my thunder with our last question, because it always is. No, this is great. It's what's your LodeStar, right? It's a nautical reference. I said, what's your guiding light, your North Star that gets you doing this? Right now, I'll change it a little bit, because you're not working directly with borrowers in the
Yep.
same way anymore.
Yep.
How do you view that now as your role has progressed throughout your career?
I think if the LodeStar is like the inspiration, right? Part of it is, my part of it's always been my family. I had an opportunity to learn from some of the best, but they've also been incredibly supportive throughout my career. But the other inspiration, particularly right now with where our industry is, are the disruptors. Are those folks that are taking a look at what we've done in mortgage for so long and looking at new and innovative ways to think through things, right? They're kind of challenging standards and processes, and helping people to think bigger and broader about what's really possible. How do we think bigger and broader to really simplify a process, as you mentioned, that customers are really very confused about, because it's very complicated. There's lots of different loan options, and there's lots of different needs that customers have, and they only go through this a couple times in their lifetime, and so it's complicated, and not something that somebody goes through often. I think there's an opportunity for us as an industry to look at ways that we can simplify the process, simplify how we communicate. We have a lot of jargon in our industry with all the acronyms that can come to mind. And so the disruptors right now, I'll go back to your initial question. The disruptors are an inspiration, I think, to a lot of people right now. They're looking at new ways to simplify the process, to you know challenge kind of our standards and processes. So I'm excited.
No, I think that's a great point. And where will the balance be, right? There's folks in the industry getting pulled along, kicking and screaming.
Yeah.
There's people who try to disrupt it without kind of understanding the way things are done.
Yeah.
So we're going to meet somewhere in the middle, and where that's going to be remains to be seen. So a point of conversation for our next podcast,
Yeah,
I'm sure,
that
whether
sounds
it be
great.
on yours or mine.
That sounds great.
So, Melissa, where can folks find you to learn more about TMC or follow your content?
Yeah.
Any of that?
Yeah. So obviously on LinkedIn, would love to connect with anybody there, at Melissa Langdale. And then if you're interested in learning more about the Mortgage Collaborative, we are growing membership right now. And so I'd love to hear from you. My email address is just my first initial last name at mtgcoop.com. So mlangdale@mtgcoop.com. So thank you so much for having me.
Great. Thanks so much for coming on. And everyone, thanks for listening. Feel free, please follow us, comment, like, subscribe, and we'll talk to you next week. Have a good one.